Good morning and welcome to Morning Markets with True Potential. Checking up on news and developments of last 24 hours. We saw a good returns in financial markets overall. Equities were up across the board. So were bond markets. Government bond yields fell through the day. We also saw some marked moves in FX market. We saw yen delivering almost 2% gains versus the dollar, while dollar were overall stronger versus other pairs like GBP and euro. We also saw some marked moves in commodity markets. Oil was weak on lower growth demand, while gold benefited from weakness and recessionary fears overall. Big news from yesterday was US second quarter GDP data, which showed the contraction in the overall economy of 0.9%. This is first time a back-to-back contraction we have seen since COVID crisis in 2020, where we saw the first quarter GDP in the US also contracted by minus 1.6%. The print was particularly surprising. Markets were expecting a flat to slightly positive numbers. This also goes in contrast with what Chairman Powell asserted on Wednesday, where he firmly believed that US economy is not in a contraction territory or not in a recessionary territory, given the strength in the labour market. Janet Yellen, in fact, came out late yesterday, reaffirming the similar sentiment that they do not believe that US economy is entering into a recession or is in a recession. If we start peeling a little bit of onion layers, what is driving the softness in GDP, we see the final demand from consumers was weak, and also we saw worsening of inventory situations overall. This goes in line with what we have seen and been talking to you over the past few months. We saw weakening retail sales, weakening housing data, and also PMIs and purchasing manager indices are also showing some weakness from the business activity. Though what was interesting was the market reaction. The equity markets wobbled on the news, but as the session progressed, investors rushed to bet that the Federal Reserve will be more measured in their interest rate rises, as they would very much so want to avoid the recession situation in the US economy. And perhaps there was the investors also betting that the correction in the equity markets have gone too far, and risk assets have largely discounted the slowdown we are currently witnessing. The overall sentiment was also lifted by some strong earnings from likes of Apple and Amazon, which delivered better than expected earnings. We also saw consumer-facing companies like Etsy deliver better results overall. Here in the UK, we also saw similar positive momentum on earnings front. We saw Anglo-American, Shell and NatWest this morning delivering better than expected earnings overall. So all in all, better earnings data this week. We'll see how the next week pans out, but overall earnings have been holding up so far reasonably well. To sum up, a good market reaction on a weaker data and expectation that the central banks will like to avoid recession scenario. So, and the markets have corrected quite. Markets have baked in quite a bit of slowdown already in the valuations. Looking ahead, investors will be keenly focusing on the data, PCE inflation data, which comes out this afternoon. Why it is important? PCE inflation is what is Fed's favored measure of overall measuring inflationary pressures. It has been hovering around 4.7%. Market is expecting similar returns, similar print this month. As we heard from Jerome Powell on Wednesday, the Fed is currently on the data dependent. Any rate rise will be taking inputs on what data is coming on. Inflation is going to continue to be the one key factors into that rate rising. So hence, this data could be important given it can dictate the pace of rate rises from here. We will leave it there for now. Thanks for watching Morning Markets and have a good weekend.
If you're interested in taking your investing to the next level, or would like to know more about the options available to you when you retire, then download our free guides to ISAs and pensions. These are available in the video description below.